everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is our tick scalping live webinar. Today, we are going to attempt to make 10 ticks. Now, we're going to make 10 ticks. I'm going to go ahead and line up the markets that we're going to be looking at. We're also going to be using a couple of different strategies. These are going to be my strategies. A lot of times, we go 5-8-13s. We go 920s, we go 9 EMAs. These are going to be the strategies today that I would actually use to intraday trade our asset classes. We've got one currency, we've got a stock, we've also got, a stock index, then we've also got crude oil and gold. Commodities, those are our bread and butter. We probably can make 10 ticks just off of the crude oil and gold markets, but I do want to diversify a few of our trades and build some in each, in really each asset class. So that's going to be the goal for this live stream. We're going to see if we can do a little bit of tick scalping. I'm going to talk a little bit about what tick scalping is to begin with. And then we're going to get you lined up and actually get in the live market and make some trades. Now, when I say live market, demo, these are going to be demo conditions, and we're going to be using demo leverage. We're going to be trading futures contracts today, and we're going to use one contract and two contracts. We're going to use two contracts where we deem it necessary, and we're going to use one on most each and every trade. The goal here is 10 ticks. Now, that depends on what really how much money depends on what we're trading. For instance, one of our currency FX is going to be worth about 6.25 a tick, and then our E-minis are going to be worth $12.50 a tick. CL, our crude oil is going to be worth $10, and then gold's going to be worth $10 as well. So we are going to look to make about $100. That's the goal today. On the last live stream we did this, we made $140. I'm going to show you the tote board and everything that we have going. So this is our tick scalping webinar, and I want everybody to understand that this really is sort of my bread and butter. They say, Shane, what's your wheelhouse tick scalping? This is what I do. This is what I do best. The Fibonacci levels, the swing trades, the things that we point out in the live market, those are pretty good. The trade ideas, those are pretty good as well. But tick scalping, this is how you make a living, or at least how I've managed to fight and claw and make a little bit of money over the years. So switch markets. Remember, if you want to be a tick scalper, go ahead, bring your ambition into focus. They've got every market you can imagine over there. They've also got great leverage, great bonuses. So go over there and get started. If you want to kick your trading career off today, be sure to do so. As far as what we're talking about, tick scalping. This is over on the How to Trade Calm YouTube channel. Go over there, click videos, and then just run tick scalping in there, and it's going to bring them up. Now, master the tick scalping strategy in 5 minutes. Well, maybe not master it, but I can get you going in the right direction in relatively short order when we're talking tick scalping. I'm experienced. I've been a tick scalper for more than a decade. When I originally started, I didn't really tick scalp as much. I took sort of short-term position trades, but I would say about 4 years in to my career, I switched exclusively to tick scalping. And the reason why is that, well, not exclusively, but on an intraday basis, the reason why I did this was because I got sick and tired of giving money back to the market. Made me really upset to give money back when I didn't have to give it back. And to me, I found that giving back money was unacceptable, and it was something that did not work for my own personality. I said, well, Shane, you're looking to try to make 20 ticks on this one trade in crude oil. But man, 90% of the time it's going 3 and 4 ticks in your favor. How can you give that back in hopes of hitting, a little bit of price extension to your goal, especially as a retail trader, because I didn't have much money. My profit targets were bigger than, my stop losses. I traded like everybody trades, 1 to 2, 1 to 3s, 1 to 4s. And I said, I'm done doing this. I'm going to start racking money. I'm going to start ringing the cash register and taking the money off the board. And it's been pretty good to me. It's been something that agrees with me psychologically. I feel confident in almost every market condition going in and taking a few ticks. I feel good about it. And right now, we're going to trade some asset classes. The markets aren't alive right now. We're going to try to get in on a couple trades. We are going to make trades in the next 25 minutes. We're going to do that. And our goal is 10 ticks. Now, the big question that I would get is my maximum risk, and I'm going to talk about that and how that's a bit nuanced here in just a second. So these are all the materials over at How to Trade Calm. If you're interested, there's tick scalping. There's a couple of shorts there. Top 2 tools. You have them, tick scalping. We've done live streams. We've done all sorts of things, definitely, with regards to tick scalping. So if you're interested and you want to be a tick scalper and you want to trade this type of strategy, head on over to Switch and get up and running, and we can get you up and running relatively quick over there. Okay. What is tick scalping? In short, you're taking small profit targets repeatedly. That's basically what scalping is. When I talk about ticks, the word tick is the smallest increment that a futures contract moves. It's almost the same as a pip. Like a pip is the smallest increment in which a currency pair moves. The only difference is you have fractional pips, so it's not really the smallest, but it's one of the smallest. When I'm talking ticks, I'm typically talking futures. When I'm talking pips, I'm talking Forex. You can view them as being relatively the same. They really are the same thing. Let's have a sip of coffee here. You're going to have to excuse my voice. I've done a lot of voiceover work this morning. I'm still stiff from yelling at the football game last weekend. And then also I had some meetings earlier today where I had to talk a lot. So my voice is a little bit raw, but I will bring it as best I can today. So that's what tick scalping is. We're taking small profit targets repeatedly. That's the idea. We're not committing to one side of the market or the other. We're just placing positive expectancy trades. Okay, here are the rules for today. My goal is 10 ticks. We're going to shoot for 10 ticks, which is roughly right around $100. The risk, the maximum risk we're going to lay down is a 1-to-1 risk versus reward ratio. Now, when we're tick scalping, sometimes you have to be able to say, okay, my risk versus reward ratio, what does it need to look like? It's not always a standard 1-to-1. It's not always a standard 1-to-2, 1-to-3, or it's not a standard, 1-to-1/2. When you're tick scalping, you have to be able to roll with the punches and move quickly. You need to be able to think quickly. If price hits your entry point and goes directly in your favor, you're going to take the money. Now, what does that mean for a risk versus reward? Not much. It's very hard to determine your risk versus reward when you're tick scalping. Why? Because we don't really know it. We know that we're looking for 3 to 5, maybe to 8 ticks if we're in a highly volatile market, but we don't really know, what's my stop out point going to look like. Now, a good rule of thumb is 1-to-1. So if I'm shooting for 3 to 4 ticks, I'm probably not going to want to take a loss greater than 3 to 4 ticks. All right, I understand that. The problem is if you put that stop loss right there at 3 ticks or 2 ticks or 1 tick, who's to say that you don't get stopped out before you get paid and price is just vibrating, it's not picking a direction. So when we tick scalp, we're going to be a little bit flexible with our risk versus reward rules. However, if we put it down and we say, okay, we're risking 8 or 5 ticks here, then we're looking to take a maximum of 8 or 5 ticks. So think of it as your regular risk versus rewards, but sort of inverted. Now, the big thing about tick scalping is you can't afford to take big losses. So you've got to be quick on the trigger. And when we do this, we're thinking in terms of time. In and out, in and out. We want in, we want out, we want in, we want out. We don't want to get caught in the market. We don't want to be exposed to the market. Why? Because that exposes us to systemic risk. That's something that we cannot deal with. We cannot let a tick scalp sit. Now, there's going to be a bit of a caveat. Sometimes you can let them sit, but in that instance, you're going to have a solid risk versus reward and a solid stop out point. You're going to need to do that with currencies probably. I'm going to show you exactly how to do that in just a second. So that's the one thing I wanted to get out of the way. Okay, for today, 10 ticks, no more than a 1-to-1 risk versus reward. That means we're not going to try to make all 10 ticks in one trade. We're going to make a couple trades. Target markets, crude oil, gold, S&P 500, which is going to be the E-mini S&P 500 futures, and Canadian dollar FX futures. I see a level there that I really like, and potentially I think we're going to make a little money in the CAD. All right, strategies. What are our strategies for today? I'm going to use my Fibonacci retracements. It's my go-to. We're going to use range strategies because I've been watching the markets. They're slow. That's going to be my Bollinger Bands. All right, so we're using Fibonacci, Bollinger Bands, key levels, and I reserve the right to trade a chart pattern, maybe swing highs and swing lows. Just depends if we need trades. Time frames, short to ultra short. We're going to start our analysis with sort of a 4-hour to 30-minute, and by the end of it, we're going to be down to probably 1-minute charts. That's what we're going to look to do today. 10 ticks. Let's see if we can get it done. All right, we've got a couple of questions here. I apologize. It is very, very dry. Very dry. Clive Harrison, how you doing, Clive? Welcome. Good to see you. Let me see. Lebo. Hi, Shane. Yesterday you spoke about Pine Connector for Switch. Is Pine Connector the same as a trade copier? No, it's not. It goes right through. It is hooking up your trading view to your MT5. So I guess you could say it's a trade copier and that you're going to place the trades on TradingView, but you're going to use alerts on TradingView, and that's going to trigger the trade placement on MT5. So I don't believe it's a trade copier, whereas you would just copy my trades. I don't believe that that's the case. All right, Andy Tong, let's go. I hear you, Andy. All right, start your engines. Lita, how you doing, Lita? Welcome. All right, so we've 10 minutes. We've set everything up for you. Now we're going to go trading. The goal, 10 ticks. I'm looking by the bottom of the hour, 20 minutes, 10 ticks. Now, it may happen fast. We may get 10 ticks straight away, and then I'll talk some news. Or we may have to sit here for a little while and try to make moves according to our time constraints. That's the goal. That's what makes this a challenge. All right, let's do it. Okay, so we're out here. This is going to be your Canadian dollar FX futures. This is the 6C contract available on the CME group. You'll notice the last time we went tick scalping, we made $160. Those were two trades that we had. Let me see, two trades that we had on gold. That's a bunch of orders we were working with earlier. Positions, we are flat. Balance history, we went up, made a few trades, three different trades on our gold market. We had crude oil, and then we had gold and gold. So that's what we did last time out. We didn't journal any of it. So here we go. Okay, let's look at our markets. First target market is going to be your 6C contract. That's your Canadian dollar FX. This is going to be your ES contract. That's going to be your E-mini S&P 500 futures. Interesting 30-minute chart. A little bit of a break right here after the open. First hour of trade, a pullback into that range. And now we're sort of working to the long side. Interesting stuff. We're going to go over the orb there in just a second. Crude oil, dead as fried chicken. Absolutely dead as fried chicken. When I look at crude oil right now today, I go, God, there's a lot of ways to lose money. I can tell you immediately what we're going to do with our game plan. We're going to take it down to a 5-minute chart, and we are going to be looking at our Bollinger Bands. It gets no flatter than that. No flatter than that. So right now I would be looking to take a short somewhere right at this upper Bollinger Band. If you guys are familiar with this strategy, it is called the Piranha. The Piranha. We've adapted it. I use my own setups. I use my own inputs for my not my Fibonacci's, but my Bollinger Bands, and we've got a pretty good trade right here. So what we've seen in the last 5 minutes is a little bit of participation. 512 contracts changed hands in the first 2.5. Plenty of volume there for us to get paid. I'm going to go ahead and look to sell this upper Bollinger Band. So upper Bollinger Band is going to be 57.39. I'm going to go ahead and enter my sell order at 57.38. So we're going to go here. We're going to go sell limit, one contract, 57.38. And that's going to go ahead and be our sell. So I'm going to go ahead and get that in the market. What are we looking for a profit target? I'm a little bit flexible here, given how tight that is. 57.33 is about the midpoint. What is the midpoint of our Bollinger Bands there? 57.30. I'm looking for 3 ticks. Let's see if we can get 3 ticks there. I'm going to go with my take profit, which is going to be about 3 ticks. We're going to get that all lined up and ready to rock and roll. We may have our first election of the day. Now, as far as a stop loss goes, what I want to do here is I want to say, okay, if this thing goes against me, as soon as we're entered, I'm going to go down to my 1-minute chart. And we're going to look at the 1-minute market structure. A couple things I'm going to be looking at. If a lot of volume comes into the market and it goes against us, we're going to bail. We're going to bail. We're going to rip the Band-Aid off. We're going to come back and we're going to fight in some of these other markets to get in with a little bit more confidence, a better trade. We've got to play a lot of great defense. We've got to play great defense if we're going to be tick scalpers. So always remember that you want to be strong on D. That means we don't want to give anything away. We are playing tight, but we are playing aggressive. We are in these trades to win every trade we take. We want to give these things a chance. We don't want to cut them off, but what we want to do is we want to be aggressive. We want to be aggressive on our stop outs. We want to be aggressive on our profit targets. We cannot sit here and wait for anything to happen when we're tick scalping. We can't afford for one of these trades to get away from us. All right, that's my speech. That's my pump-up speech to be a tick scalper. If you guys want to live this life, it's not an easy one, but there's money there. There's money there. All right, let me see. Lebo, may I ask, what's the difference between a limit order and a stop order? I've never used either one of them. I'm always using market execution. Nothing wrong with that, Lebo. If you got to get into the market right now, you use a market order. That fills you at the best available price immediately. What a limit order is a limit order is an order that we put into the market where it is filled at that price or better. So a market order is filled at the best available price. A limit order is filled at that price or better. A limit order is held at the market. So you're going to put a sell limit. You're going to put that above price action. The reason why you'll do that is if you put it below price action, what's going to happen? It's going to get filled instantly, right? So a limit order is filled at that price or better. A market order is filled at the best available price. That's it. A stop order. Stop order is just, that's held at the market. Okay, right here we go. We've got our first live trade of the day. A little bit of price action here. We're sort of stuck right at 38. We want to see that retracement come down and fill us up. Let's get down to a 1-minute chart and see exactly what's going on in the micro. I like this trade. I think it's a decent trade, starting to go against us a little bit. Let's give this a little bit of time to work. Now, on the 1-minute chart, we've broken out a little bit. We're up to 40. We're down to 39. Now we're back down to break even. I'm starting to get a little bit skeptical about that immediate price action. Look at the volume. The volume kicked higher, 679. Okay, we've got to be very careful that this volume doesn't go against us. 38. Okay, now we're ticking 37. Let's get down to 36. Give me a 36 or a 35. Give me a 36. All right, right now we're at break even. Give me a 36 or a 35. Let's get paid off very quickly. We're plus $10. What happens now? Right now, we've got to be very cognizant about what to do with our trade. We want to get out of it. I want to get out. Okay, bam, we hit the first one. Hell of a trade, great start. That's tick scalping. In retrospect, what would we do? What would we want to do there with trade management? That first minute was over. What was I going to do? Boom. Stop loss. Bang, right there. Right above that top. Top right there's 40. We would have been there at 41. This is one of those instances where you just want to get out at that point. What would that risk have looked like? 3 pips. We sold 57.38s. We got paid off down in our 57.35s, 3 pips. So that would have been a 1-to-1. We didn't know that until that 1-minute bar was done. Now, why am I focused on the 1 minute? I needed a smaller increment in a way to manage the trade. All right, so right there, look at that flood of volume. Scary. Now, one thing we know this time of day with crude oil is that flood of volume probably not going to be steady. So the volume dropped off. We went down. We got paid off. So what are we on the trade? What are we? Okay, so we're up to 190. So we're plus 3 ticks. Remember, we started at 160 today. We're plus 3 ticks on the day. Let's just go ahead and do our balance history. Right there's the first trade. So what do we need? We need 7 more ticks, and then we hit our target. All right, here we go. Gold futures. Breakout day for gold. Big bullish day for gold. We've got a situation where nobody really seems to know where the top is. We know that this is a bullish market right now. We know that volume is dropping way down as the day has gone on. What could we potentially be looking at doing here to make a decent trade? I don't particularly want to sell. I don't really want to sell. And I also have to recognize that the market is flat. It jumps around, though. Gold's a little bit different. Gold can move, and it can move fast. So like right now, you've got about a 2-tick spread, 1-tick spread. The volume's not necessarily as robust as we'd like to see it. Let's take this down to a 5-minute chart, and let's see if there's anything we can look at here. Okay, a decent level just sort of came across the board. I'm biased to the top side. If I'm trading gold right now, I want to get long. I want to get long because long is exactly where the game's at. Okay, we're moving to the top side. What that means is essentially there's more buyers than sellers consistently. So you can see right here the volume comes in, blows things way high, and then we sort of stagnate. And now we're sort of on the rally yet again. We sort of peaked beneath the last bar's low. You'll notice that volumes are way down for this last 5 minutes of trade. What could we be looking at doing right now? I definitely don't have any problem buying 43.11 5s. I don't have that problem. The problem I have is that I'm not sure that we're going to get there in the next 5 minutes. That's the reality of it. So when we're looking at this market structure, I'm saying, okay, absolutely, I want to buy 38% with the prevailing trend. That's pretty much money in the bank for 5 ticks, right? The problem that we have is we might be sitting here all day waiting for that pullback. And the last thing I'll say about this trade idea is this, is if we rally a little bit higher, you're going to have to reset your Fibonacci's, and it's going to be trouble because the market symmetry is broken. And what that means is we traded beneath the last bar's low for the first time in about 5, 10, 15, 20, 25, 30, 35, 40 minutes. So that's going to be a real challenge there. How can we do it? Well, we can put a limit order in, a buy limit order, let it rest right there at 43.11. I mean, it looks to be a pretty good idea. Maybe we'll get involved. Let's go with a buy limit, 43.11. 0.5. We'll go ahead and shade that a tick. We'll go 1 unit. And let's go ahead and put it down. Let's throw it in the queue and see what happens. So there's our buy limit. Bang. Okay, buy it. Okay, so we're in the queue now. There's our limit order right at our 38%. Now, here's one of these things that we have to be really, really, really cognizant of, especially with gold, a market that's not really as thick, meaning the volume is sort of a bit sporadic right now. What you've got to do is you've got to say, okay, what do I want out of this trade going in? I want a little bit more money out of it. I want 5 ticks. Something like that. Now, the problem with scalping something like a gold at this time of day when the volume's not really there is our stop loss is going to be a bit pragmatic, meaning I've got to have something down just in case this market breaks away. Now, it's not very likely to get hit, but we've got to have something down in the queue. So my stop loss, we could lay it down here, something like that. Now, I have absolutely no intention of taking that loss. $220 to win 50. That doesn't work for me. That math will never work for any of you. You'll have to win almost every trade to make any money. What you're going to have to do is you're going to have to tighten this thing up immediately. But if you put it down in here where it's just at 5, a lot of times you're going to take a hit, meaning price is going to run against you because the volume flies in or whatever, and you're going to get stopped out, and then it's going to bounce right back up. So if we're tick scalping, we got to be a little smarter than the average bear. So there's 2 ways we can do it. Number 1, we could just move the stop loss up here, or get rid of it completely. Number 2, you could put it down here, 25 ticks or something like that. Personally, I will tell you from experience, it's always good to have a stop loss down here somewhere, because if something crazy happens and somebody says something bad, we're going to be looking at, okay, the worst thing that can happen to us is that we take a 25-point hit. That's not going to kill us. But let's say something big happens in the market. Let's say there's a big announcement out of the White House, and this thing absolutely craters. Okay, we're going to be live here in just a second. So let's go ahead and take a look at our trading dome. Right here is going to be our entry right at, let's see, 43.11.5. This is a pretty good little trade. I think we have a real opportunity here. I think the most difficult part of this trade is going to be getting filled. So let's take this immediately. Let's take this down to, say, a 30-second chart. So essentially, this is where we're sitting. All right, we've got our buy limit right there on that 5-minute Fibonacci line. We want to see if we get filled up. If we get filled up, we need to get that profit target, and we need to get it fast. I don't want to wait around, and I don't want to dawdle. So I'm going to be very quick on the trigger here if we do not get it. The last thing I want to do is take a big loss here. Now, if it happens, it happens. Okay, boom, we're filled. What happens here? Are we going to get the bounce? Okay, the price is going against us. It's going against us. We've got to give this a little bit of a second to respond. It's going against. Okay, there's our kick. There's our kick back to break even. Back to break even. Now we need that positive kick. Give me the 5. 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 Okay, printed. We didn't get filled. Okay, bang, 5. All right. That kind of trade right there is what I'm talking about. And beautiful. I get asked a lot, Shane, what kind of chart patterns do you love? Hammers. That's a hammer. That is a hammer. You got a 30-second hammer, shows up right off of our key level, and now you're seeing price extension to the top side. Now, what we've got to do is we've got to fight through the psychology that really works against you as a tick scalper. Remember, we are aggressive. We had no intentions of taking that. Boom, our stop loss was moving right beneath that hammer, which was going to be at 43.10.9, which was going to be about 5 ticks, right, from our entry. Somewhere in there, our entry was right here. So you can see that we're tightening these things up relatively quickly. Now it hit our profit target before I could move the stop. That's great. Now what's happening? Here's where tick scalpers run into trouble. Almost all of them. They sit there and they go, damn it. Well, I bought 43.11s, and look, it's already up 20 points. My goal for the day is only 10 points or 10 ticks. I mean, I should have already met my goal and then some, but I took it off too early. You cannot have that thought process if you're a tick scalper. You've got to get what you're going to get front and center. We're not position trading. Now, if you're saying, okay, I've got a 5-minute there, I go down to a 30-minute chart, and I'm going to trade that hammer formation, and I'm going to trade that hammer, and I'm going to look for 20 ticks there, God bless you, go for it. But we're not trading chart patterns. We are tick scalping. That was a key level tick scalp. 38% Fibonacci retracement with the broader trend. That trades money in the bank. the only way we run into trouble is if we get a big rush of volume and we get knocked out of the box. Okay, so we're doing all right thus far. You'll notice that if you're holding these trades, it's a completely different ball game. Now you're like, well, I'm way up, I'm down, I'm up. Well, we're tick scalping. We're getting a small profit right up front, and we don't care what happens now. The trade is over. I couldn't care any less. I don't care. I got what I wanted out of it. Okay, let's go to our ticker. Okay, 30. We're up 8 ticks. 3 ticks there, 5 ticks there. So our commodities have been very good to us. So what do we need? We need 2 ticks to hit our profit target. In all actuality, you probably need to throw an extra tick in there for commissions. For the sake of this demonstration, we're probably going to try to do that. So we're up 8 ticks. My goal is 10. What's my mindset right now? I want to hit my target. My target's 10. Okay, crude oil. Do I want to do anything more with crude? How about E-mini S&P 500? Interesting. How about our, what would you call this? Oh, this is our Canadian dollar FX futures. Thing about the Canadian dollars, we're going to have to put 2 contracts on it because these are smaller, so these are like $5 a piece. We'll have to trade 2s, which isn't a problem. That's not very expensive. I would love to buy this pullback on the 4-hour chart. It is sort of based on a Forex pair. Just remember, it's like the dollar CAD, except the pricing's inverted, so it'd be like the CAD dollar. What you're looking at here is 72.57 would be decent. These ticks, the fractional ticks, half of a tick. Basically, they divided a tick into 2 a few years back, so now a tick is half of what a pip would be. So you're looking at 72.57 as your bid. I'd want to buy like 72.58s. And you can see by just looking at the markets, 72.58s, you're not going to get there probably on this live stream. It's just not moving. So when we see something, we can take it right down to a 5-minute chart. You'll know exactly what I mean. I mean, look at just how sort of chaotic this is. I mean, there's just not much volume in there. 239. So, if we were going to do this type of trade to hit our target, we'd probably put 2 contracts on and we'd be shooting for 2 ticks profit. Now, how can I do something like that? Well, it's a flat market. I could step up and buy my lower Bollinger Band. We could do that. I don't really want to, though. I don't believe there's enough action in there to get us to the promised land. So I'm going to go ahead and I'm going to click over and see about an equities index. Now, this is another rotational market. Let me see. T. Marina, good to see you. So with scalping, you should always account for higher commission fees because of the increased number of trades. No, I wouldn't think of it like that, T. What I would do is I would build your commissions into each and every trade. So let's say, you're trading futures. If you're with a decent broker and you have a decent relationship, you're all in pricing for like gold and crude oil. You probably shouldn't be over $6. Should be like somewhere in the mid 5s. And of course, the more you trade, the more higher volumes, they give you better deals. But so right here, we've made 2 trades. And I would say I'm probably sunk about $10 of commissions and exchange fees. So we've made $80, but I've really probably only netted about $70, which isn't bad, bad few minutes work, really. So you're looking at the E-mini S&P 500. Your commissions, these can be really low. These can be down around 4.5. We'll just round. We'll use $5 as just sort of a nice litmus. We could use 6 or whatever you want, but typically I like to make sure that I calculate, I account for the commissions and I cover it with my trading, as opposed to making a bunch of, that's why like taking 1 tick or 2 ticks without commissions. There's a lot of people out here that do that on the internet all day long, on YouTube all day long. They say, okay, we hit our target. Well, you didn't really, because you took 1 tick 10 times and basically you just commission traded. What we're trying to do is we're trying to hit this with as lowest commissions as possible. We've got 2 pretty good trades already in the house. Let's see if we can finish up. So, yeah, think of commissions on a per-trade basis. Definitely. Yeah. Think of it as a business. If you're taking credit card payments, that 3% you have to kick back to Visa, right? That's why a lot of folks don't do credit cards. Something to think about. 30-minute chart. Okay, let's go ahead and break down this E-mini S&P 500. Right now, nothing's happening. We're about flat for the day. Let's see, what are we? We are flat, E-mini S&Ps. We're right at scratch. So that tells me it's a rotational type of a day. We did see sort of a bullish breakout on the orb. So if you were trading an orb, let's say you were trading a 30-minute orb, this is sort of what it would look like. Okay, so how would we approach this trade? I don't really feel great about picking a direction here. I really don't. Do I want to be bullish or bearish? Market's flat. I would be looking towards rotation. What's our rotation strategy? Well, we just hit a rotational trade with the crude oil. What's the difference between this 5-minute chart and our crude oil 5-minute chart? This one's wide open. This one's wide open. How do you want to trade it? I could trade my moving average right now. We're banging up against my 13-period EMA on the 5-minute. See that? I could take a long trade right now and stop myself out down there. The low is 68. Let's see, 68, 90, 50. We would be risking about, 8 ticks there? I'm not interested in that. It's not good enough. So what could we really do? Well, Fibonacci's aren't good right in this situation. They really aren't. You could use a Fibonacci retracement sequence, spike low to a spike high there. You just don't want to do that. You got a pretty good kickoff of 62%, but the market is really, really dead down there. I would be very, very careful using things like this. If you wanted to trade it, you probably could step up and buy, 68, 89 and a quarters. We only need 2 ticks now, remember. These are worth $12.50 a tick, so these will cover the commissions. So I would be shooting for probably 2 to 3 ticks on this trade. The last thing I want to do is give anything back. We're already up 8. So the question now is, can we finish strong? Fibonacci's, I don't like them in this situation. The market's flat. So we're sort of in a predicament here with our trading. Looking at this market, big picture, what would be the best trade on the board for us today? Probably be the New York range. So there's your New York range. There would be your Fibonacci's. Important observation. Really, since the bidders stepped in right here in the second 30 minutes of the day, what do you have? Nice big run, then a pullback. You have perfect symmetry. Each one of these lows are higher lows. Doji here. So, this trade right here, that's bank. We know we're going to get that. 68.75 and 3/4 comes into play with our 13-period EMA, 68.76 and a quarter. It's an absolutely phenomenal trade. The problem is right now we're 14 points ahead of that, which is about, divided by 4 ticks and a point, you're up to about 56 ticks. Do you think we're going to get that? No, we're not going to get that anytime soon. Maybe towards the end of the day, maybe power hour, we'll get it. But for right this minute, you're probably not going to get that. So 68.75s, if I was trying to hit my 10-tick thing, my 10-tick target, and I had the rest of the day to do it, that would be my trade. There would be no question about it. That would be my trade. So what can we do now? We need 2 ticks. Let's look through our markets again. A little bit of movement here from this Canadian dollar. I really would love to bid this. That 4-hour level down around 72.57.5. I would bid that. That's almost a guarantee that we get our 2 ticks there. No question. This right here, that's a cherry trade. If you get an opportunity there, probably a pretty good one. The other thing you could do if you're only looking to make 2 or 3 ticks here is to play right off of this top level. Now, you'll notice that our intraday high is at 68.99. That's not an accident. You've got 6,900 right up there. Now, do I believe 6,900 is the end-all, be-all? No. It's just 6,900, but there's no denying that there are sellers there. This is why I love smart money concept traders so much. And if you're a smart money person, that's great. But, don't think that you're magic. 69 is the reason for the liquidity sweeps up here. It is. The institutions stepped up. They defended it there. They defended it again there, and they defended it again there. So what are we really doing here? We're looking at 69 and how price behaves around 69. It has nothing to do with, those are institutional footprints and all this. Maybe, maybe not. Maybe the market just decided we're going to sell the hell out of it up there at 69 and defend it. That's trading. That's tick scalping. That's trading. So the real question is this time, what do I want to do up there? Do I want to sell it again? Could. If you play it tight, I mean, I really don't have a problem selling right in front of 68.99, maybe 68 and 3/4. Stop myself out at 99.75. Wouldn't be any problem with that. We could definitely take that short right there. Is it high risk? I think that if you break above that 68.99 level, you're going to go for a little bit of a ride up there. And that's going to be a situation that could get very hairy very quickly. So for me, sort of be waiting. Now, one thing that you do have working for you, take a look at that 99 level, or excuse me, 6,900. What's our upper Bollinger Band on the 30-minute time frame, which is my bread and butter, 69.0155. More than likely, you're going to get some money up there. What are we off right now? We're not very far off at all. We're only about 2 points off, about 8 ticks. Could we sell up here and get away with it? More than likely, yeah. We probably could. Is it worth taking? Let's have a look. We need 2 ticks. Well, let's shoot for 3 ticks. Okay, so right there is your daily high. 68 or 68, 98, 75. There's 69. Let's try selling it. Let's go sell limit. We're going to go 1 contract, and I want that sell limit order right there. No, that's right. 68.99 1/4. Okay, let's sell it. Now, we are not going to play games here. Okay, we're officially short. Take profit needs to be right there. 2 ticks. Bam, got it. All right. Admittedly, I was late on that. Is that a great trade? That's tick scalping. Did we get paid? Notice how fast that was. I'm sorry, we didn't get a very good illustration there. Orders, order history, balance history. There's our 2 ticks. $12.50 a tick, $25. So we made $105 today in just over 27 minutes. Let's go back and sort of rework that last trade and show you exactly how it worked. We were looking to our orders. We were right here. Limit price was 68.99 1/4. What did we do? Hit it perfect. 69 even. So we were looking right here. Right there was our entry. Hit us, instantly reversed. Why do you think it instantly reversed? This is a 30-second chart. Why? Big round numbers. 69 was there. What's the top? What's the top of that bar? 6,900. So at least for the last minute and a half, sellers defended that key level. We win again. Would I take that trade now? Not a chance. 69 is going to break now. So if you were serious about it, saying, okay, this top is suspect, look at the volume. Volume spikes, you reversed off of that key level. What happens now? We could easily break and rally. So if this is going to be a trend day up for the E-mini S&P 500 futures, you will break that level and you'll go higher. If that level holds, you could be looking at a top. All right, everybody. Well, that's tick scalping. Just a quick review of our trades today. Pretty good stuff. We had that sell. Sold the E-mini S&P 500. We got $25 there. We canceled that one because that was our stop loss. Let's see our gold. The gold buy, the Fibonacci buy with the pressure. It was at 43.12. We got filled there. That was worth 5 ticks. And then also that first tick scalp on the flat crude oil market using a 5-minute chart and the Bollinger Bands. We made 3 ticks there. So 3, 5, and 2 puts us right around $105. I'm going to go ahead and leave it there for today. We could probably stick around and try to scalp another 10 ticks doing this stuff. But you guys sort of get my meaning here. So we've done 2 of these tick scalping strategy sessions. We've hit it both times. in order to be a successful tick scalper, you need good market access. You have to be in a situation where you've got good fills. You need your commissions to be as low as they possibly can be. And you need to be aggressive. You need to think exactly as fast as I was thinking. That last scalp happened fast. Take a look at what's going on now. Now, we're tick scalpers, right? We got paid off. We are in and we are out right down in there. And now the market's moving against us. Now it's going against you. This is the single biggest advantage of being a tick scalper is who cares what it does. We already made our money. We made our target. Who really cares? Now, a couple of safety tips for tick scalping. Number one, I would avoid your high impact news events because the volatility is going to be too big. The range is going to be too big. It's going to be very difficult to manage your risk aggressively because the swings are too wild. Now, you saw we traded 3 dead markets for the most part, and we made 10 ticks right there in 30 minutes, just a shade over 30 minutes. Imagine if you had a good approach for 10 markets and you sat there for 2 hours. And as long as you could maintain your discipline and be very, very aggressive on your risk management and be humble with your profit targets, imagine how much money you could theoretically stack up doing that type of thing. And every one of you can do it. I mean, I'm not magic here. Every single one of you can do it. The big question is are you going to put the time and energy into building strategies and building knowledge and experience that can give you what you need, the intangibles, to win being a tick scalper? Now, admittedly, it's not for everybody. Swing trading is a lot easier than what we just did today. All right, day trading, pure day trading is a lot easier than what we did today. But the mentality is completely different. If you're a day trader, if you're a swing trader, you have to be okay with price going in your favor and then coming back and then going in your favor and coming back. If you're a tick scalper, you need to capitalize when price goes in your favor. You can't let these trades sit there or else you're going to get destroyed. Right now, what would your psychology be? What would your psychology be on this E-mini trade? Okay, I only wanted to get a couple ticks and I should have been out right there. And now what are you doing? Well, I'm short from right here. It hasn't gone against me that much. Yeah, but it has gone against you and you are negative. This is the type of trade that goes a little further against you and then goes a little further against you and then goes a little further against you. And you're sitting there going, well, it's not that bad. Well, it's not that bad. Well, maybe I'll just make this a day trade. But it's not a day trade. It's a tick scalp. Don't get your stuff confused, guys. If you're going to tick scalp, you be exactly as aggressive as we were on this live stream. You do not let those trades sit there. If you got a shot to take some money, you take it. That's the cardinal rule of tick scalping. Don't make the same mistake everybody makes. Oh, well, I'm going to make a fortune on this tick scalp. No, you're not. It's a tick scalp. If you want to make a fortune, we'll talk about different ways you can invest and get long with some meaning or short with some meaning. But tick scalping, I mean, we're on a 30-second chart, for God's sakes. Look at the prices blowing up in your face. Look, I mean, it's getting worse and worse and worse. If you don't take the profits right there when the sellers defend 6,900, you're getting destroyed right now. And this right here, you take a loss like this, where all of a sudden you're going to take a 16 or 15 tick loss and you're a tick scalper. Think of how many trades you have to win in a row to make back 15 ticks. You're going to be sitting there all week trying to make that loss back. Can't take those losses. And it's not necessarily a function of risk versus reward in, okay, I'm going to risk 2 ticks here. It's not necessarily what it is. It's about feel. It's about understanding where the orders need to be. It's about getting out of your own way and taking the money when it's available and not holding on to what I call ducks. That S&P 500 short trade is a duck. That thing could blow all the way up to 69. You could go all the way up to 69 and a quarter, 69.50 today. Holding it, believing the market's going to come back. Forget that. That's not tick scalping. That's position trading, and we can talk about that some other time. But as far as the tick scalper goes, you're aggressive. You're in and you're out. That's it. Okay, everybody, I want to thank you for joining me today on our tick scalping live trading webinar, courtesy of Switch Markets. Remember, if you want to trade anything at all under the sun, head on over to Switch. They'll get you set up. Lots of bonuses, lots of credit bonuses, great market access. If you're in a municipality that is supported, if you're here in the United States, though, you're out of luck. Switch doesn't service you. That's okay. But if you're in most other areas around the world, you can definitely get involved with Switch. All right. As far as what the plan is moving forward, remember, we're not streaming on Fridays for the rest of the year. So I will have the trading, let's see, I'll have the live stream schedule up a little bit later today. So you're going to want to check that out for next week. I believe we're going to have CPI live and NFP live. So I'm going to be up early all week long, and that's cool with me. If you have any questions at all about tick scalping or what it is to be a tick scalper, be sure to reach out to me over at How to Trade. Send me a private message. I'll be sure to get back to you. If you have any questions or comments, you can also leave them below this live stream video on the Switch Markets channel, and I will get back to you. Remember, if you're tick scalping, it's so cliche, but there's the quick and there's the dead, and you're either going to be quick or you're going to be dead. Don't let these positions get away from you. That's all I got to say. Aggressive in, aggressive out. We are confidently aggressive. That's all there is to it. All right, guys, we hit our target. I'm very happy about that twice in a row. Maybe we should just do this every day. Show up and make money every day and go home. All right, guys, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.